Okay. There you go. All right, so we're talking about the fifth lesson here. And again, we're just going to go through map price, market intervals, and pretty much the same information as the last class that we had. Okay, good. You know, because this is purely 100% price action in the way you have to do it yourself, because, you know, of course, the map price of market areas are not completed. Otherwise, it will be like 1,000 pages book, because every single instrument in the market has the different intervals, and you have to be able to actually do it yourself. Okay, so I'm just going to emphasize a little bit about that on this particular meeting. And also we're going to go through what happened last Wednesday with the rate of the United States. Again, that was not the consumption rate, so that's not the central bank rate, but was the interbank rates. So it changed everything for us. We were expecting this? Yes, we're expecting this. Not just because the banks have to do something with the rates in order to adjust inflation, but also because of the time of the year. Every time on these particular months, and actually June, July, we typically have the market corrections. Okay, so we talked about that last meeting. So again, now you know. You have to expect this time of the year, the central banks, they review the monetary policy and they make changes. So when the monetary policy, the rates are too low because of the previous crisis for a long period of time, plus the money they injected into the economy, then yes, they're going to have inflation. How do they adjust the inflation? Saying or doing, because it's in the market is also the saying and sometimes not the doing, the rate of the central bank. Again, it was the inter-federal banks, not exactly the Fed. But anyway, it took the same impact in the market. It was the same impact in the market. So we were very careful not to get stuck with what? With any buy on the euro, any buy on the pound dollar, any sale on dollar Canadian, any sale on dollar yen, any buy on gold and silver. Okay? Because again, what we were expecting is this type of situation to happen. Not always going to happen because of the rate. Sometimes it happens for many other reasons. Okay, so now you know. March is a very delicate month to work with, because again, all the market areas are going to be shaping everything in the market. And then you have also a very delicate month is June, July. So what I mean by that is that you're going to have in mind always a strategy, always keeping a strategy in mind, you know, buy or sell. And then this time of the year is when you cannot get stuck with a transaction that you know that might turn around because of we are close to these days. We don't know what day is going to happen, not even what exactly month is going to happen, if June or July, but we expected this. Okay, so we were lucky enough, and all my traders, you know, were lucky enough to just do a good job, and none of them were stuck with any transaction against these corrections. But then I have, I'm going to say 80% of people that they follow me on the channel, on social media, and everyone asking and writing, what am I going to do with this transaction? What should I do here? What should I do there? And I'm like, well, you know, you can't do this by yourself. First of all, if you're doing this and you're losing money, get into the live trading session. Trade with us. Trade with us. You can't, this business is not to be done by yourself. Eventually, and I don't care how good you are, eventually you're gonna, you know, stack your head into the wall because you did not see this coming. So take advantage of my mistakes. I say, you know what, take advantage of my losses, my mistakes. I've been through this. And because I done now a good job to structure my trading, so I know what to expect on every single month. You know, I saved many people. I saved the people that was actually following me. But this is a daily work. This is a daily work. It's not something I'm going to tell you today and then you're going to forget in 2-3 months. Then you're going to start trading in 2022. You're going to be in June, July, and then you're going to remember this. you know. So if you follow up daily with everything, you keep in mind the strategy, you know, when not to get stuck, you start to think strategically because you listen someone doing the same. So you listen the analysis of someone doing the same, and you're gonna start thinking the same way. You're gonna start thinking the same way, and one day you're gonna be ready and you're gonna be able to do it yourself. But honestly, people that start trading with us, they are here with us forever. Okay, because they realize it's not just the strategy, it's also the emotional, you know, I'm going to say control that you get because someone is actually following you up every day on everything. Okay, so
Just a quick question with your followers. What time of day you trade?
What?
With the people that are following you for trades, to do the live trading,
Yeah.
what time of day?
Is the opening, well, we have actually, they started to get pretty good on this. So they had their own group going on the opening of London markets. So there's a leader there on the Discord group that he manages pretty well the opening of the European market. But I joined on the US market. But they do both, and they do a pretty good job because I see then all the instructions and they trading, so they do it really well. It took them like 3 months to start doing that and understanding price action, how the opening works and everything, but they got it. So they do the opening of the European market, and then I join there. Sometimes I get to fix a few things, but sometimes I just say, well, great job, you guys are doing it. So, but because of the yeah, because of
this. Is it mainly currency that you trade or something else as well?
well, we do also commodities. Yeah, we go for gold and silver. At first people they join us like I want to do stocks, I want to do everything in the market. Like they have those ideas that they had to diversify and get into crypto, FX, stocks, index. You know what? Just be good at just one thing. Be an expert on one thing and forget about everything else. Because there's no way you can be good if you want to try to do everything. Be an expert in just one field, even one currency pair. That's it. No,
I will come to your group definitely when the time is right. Right now, I have a job and I can't be.
Yeah, that is. Yeah, that's not recommended. When you have a work and you have a job and you know that you get stuck there, you can't just do this and that. I know people, they try that, they like the computer or the phone and they listen my instructions and they're also working. Trust me, it's not going to work. So you had to be, you had to be
like 100%.
Yes, you have to be really focused. Even if it is 1 hour or 2 hours, they're going to be trading with me. You have to be focused. You can't do both. Trust me. Great. Yeah, you see dollar yen and euro yen. Absolutely. Absolutely. You see? Exactly. So that's, from my experience, because I've seen frustrated traders at first, and they're like just buying a bunch of stocks and then crypto and then just, like an index, whatever. I was like, so what is all this? And they don't even know how to explain it. But to them, psychologically, it feels that they have a diverse portfolio and they're going to make money somehow in the future. I never knew anyone actually doing money with that. To me, from my experience and talking to people also that are in the market, focus on just 1, 2 instruments, be an expert on them, know every single step of those 2 instruments, do the map price perfectly done, and you're going to be perfectly fine. You don't need the diversification of anything. To me, from my experience, this market, I got liquidity from the market. I got money from the market, being an expert on just a few cross pairs. And then once I get the money out, I do my diversification, but in other business like real estate, you don't diversify on the same type of investments. That's, to me, is not diversification because it's also risk situation, is leverage markets. So, but anyway, I'm just, mentioning you probably the way you're thinking, and it's not the way to go. Okay. So if you see here, I kind of changed the format of the explanation on the analysis on the weekends. So I decided to kind of put the chart on there instead of just the writing, and I reduces the writing. If you compare this article to the previous ones, you're gonna notice that now I'm adding charts, because I keep seeing people getting so stuck on charts, and I'm like, why can't you just, you know, focus on prices and forget about charts? But honestly, I think some people have a really hard time because they were in the market, I don't know, 3 years, 5 years, not making any money. Then they join me, and then I don't care about charts, and I only see the prices, and they get so confused, really confused. So this way, I'm kind of approach to them the way to see prices, but with a little chart. So I was like, and you know, it might be, to me, it's like, I don't see why you cannot just not read the prices, but whatever. For some of them, it's really helping, you know. So it's the chart, and then I see, you know what, the preference on the pound is to sell certain levels, and the preference on the Australian is to sell certain levels. Now, all of this explanation is only for the opening of the market today. All this explanation is only for the opening today. So one of the questions that I'm being asked for the last couple of days is this. Okay, so what about the corrections? You say, okay, well, corrections are coming June, July, then what's after that? Well, after that, we have two different ways that can happen. Either the market is inside the previous market area, that it was before, or this is just a correction, and then that's it, and then everything is back to normal. That being said, for example, we have euro dollar going all the way up, and then June, July comes, and we get the correction of June, which already happened. And then what's next? So after the correction, we keep selling, or we change the strategy again and we go for the buy. Well, we go for the buy. Corrections is just that. It's just a correction of market. It will not change market areas. It shouldn't. Let me clarify that. It shouldn't correct market areas. It should not correct market areas. So if we're going in buy pressure area on euro dollar and pound dollar, corrections should not reverse from buy pressure to sell pressure. It's just a correction. Typically 50%. Typically 50%, no more than 50%. But I don't like to make those type of rules, because then you're going to expect that, and the market is not going to give you that, and you're going to be like waiting the 50% correction, and it's going to be 80% or maybe 100%. Just to clarify, because it could happen 50%, it could happen 80%. Those traders that they do those golden rules, you know, corrections are 50% of the market every time, every half of the year. No, if you've been in the market long enough, you know it could be 50%, 70%, 80%, whatever. Just do it, the correction, do the reversal of the market as long as it takes. Don't put those golden rules, because it's not such a thing as for sure it's going to give you, if it went all the way up the euro, it's going to give you 50% on June, July, and then you came back and then you go for buy again. No way, no, absolutely not. So again, it's what we expect. But sometimes what we expect is not what the market gives you. Okay, so just make sure that you know things right, and you're like, yeah, Fibonacci 50%. You just pull the Fibonacci 50% correction, then you come. No, I'm a big fan of Fibonacci, but you know, he's like old school. The markets today is a little bit more complex than Fibonacci.
The problem with Fibonacci is, where do you get your reference point where to start plotting that Fibonacci? Everybody's got a different point.
Different approach. Well, if you want to put it from price action view, you grab it from the lowest of March to the highest of June. So that's your 100% from the lowest to the highest, and then the correction starts, and that's when you get the 50%. But again, don't just forget about what I said. Just trade the correction as, yeah, you know, as long as it gives you correction. Now, what happened today is this. So we got the opening of the European market, and then I say on Friday, you guys be careful, because the reversal, it could also mean a complete switch of market areas. So that being said, dollar Canadian that we were actually selling and selling and selling and selling, and then correction means pulling back to the buyers, correction. And then what's next? I say, if the opening of today, it opened for sellers on the dollar, then everything's back to normal. That being said, everything, we're gonna short the dollar on dollar yen, dollar Canadian, dollar Swiss franc, and we're gonna buy the euro dollar and the pound dollar. That was expected. If the correction is done and we're totally free of, you know, because of what happened last week, if it is done, we're back to normal. We're back to the main strategy, which is again shorting the dollar and going and buy the euro and the pound. So that's what happened. Okay? But it was a slightly a risk of complete change of market area, very slight, but I saw it coming. I saw coming the dollar Canadian above 124 and 124.80. I saw coming a correction towards the buyers because those levels were actually inside the lowest of March. So March on dollar Canadian, I don't have anything to write down to, but I hope you can follow me with your notes because this is very important. Oh, I don't need any notes. I can write here. So let me show you what I'm trying to.
On a chart.
Yeah.
In the live chart, you can see.
Yeah, but I don't want you to get distracted with candlestick and trying to guess, you know, what's going on here. But just the explanation is going to be like this. So this is the dollar Canadian. How can I minimize this? There. We got dollar Canadian. This is the situation. So again, we were into sell strategy only, right? Sell strategy, all sellers absolutely fine. I'm talking about, this is the, I was in 4 hours. I'm going to go to 1 hour time frame. So last Wednesday, when the rates of the US interbank rates, they decided to do that change. We had the market, give me 1 second. Exactly, it was on the 16th. Okay, so we started here. That was the 16th of June. Again, middle of the year. It could be, it could happen on Tuesday, Monday, Thursday, whatever. We were only into shorting the dollar Canadian, all sell strategies, whatever. Then the announcement came to light, and we got all the buyers jumping into the dollar. So that was the full correction. That's it. Once the correction is done, like I said, I mentioned that dollar Canadian was inside the 124. Guess what level the 124 was? And let me show you in 4 hour time frame. I'm gonna go 1 hour time frame, a 1 day time frame. So, and I'm gonna go down to March so we can see it here. March. I'm gonna take from the 20th of March and from the 20th of March down to, you know, March 30. So I don't know if you can see that March 20th, the first 2 weeks of March, the market was inside the 124. And guess what we got here, the 124. Then I said, we had to be careful because I'm smelling the dollar Canadian might change market area. And we're gonna switch from sellers market area, sell market area, towards the buy market area. So if the rate of the United States will actually changing everything for us, it's going to turn around from sellers to buyers. But then that did not happen, and we are back to sellers. In fact, this is the best moment of the market, because if you say, well, I missed the most important waves of you know, the buyers on the euro, the buyers on the pound, the sellers on the dollar. Well, this is the next best opportunity, because sometimes price can get stuck between high and lows of March. Yes, well, that's the full idea. The market is going to get stuck on the high and the low of March. It will, yes, and we are doing the same. You know, March, we're very careful, like really because we know we're testing the high, we're testing the low, and we don't want to get stuck on those levels because we know that specific month is going to set up the full market area. And until March is not completed and not done, we don't know if the market is into sell pressure area or buy pressure area. So that's very important. That's why March, I don't know if you traded March before, but it's kind of stuck on the highs, very hard to get through highs, very hard to get through lows. And that's the reason why. We all do it, you know, all the intraday traders, they're just thinking the same, you know, be careful on the highs of March, be careful on the lows. So yes, it's really, it's a delicate month. It can blow up your account if you get stuck on a low or stuck on a high on March. Same situation on this month. Same situation on this month. So yes, absolutely. It's a very particular month. It's kind of also difficult to decide what the high is going to be, what the low is going to be. So, you know, once March is completed, then all free to go. We all know that, you know, if we are into buyers, into sellers. So what happened here with the dollar Canadian, it was like this. So I'm just going to start counting on the first 15 days of March. So I'm going to go from 16th of March. I don't know if you can see it. I'm the 124. And then that's the lowest. I'm going to consider that as the lowest. And the highest of March, it was 126.30. It's not that much of the difference, you know, between the lowest and the high. So 26.20, 126. And then consolidation 126, consolidation 126. By April, I said, you know what? It sounds to me that the dollar Canadian is not going to pass the 126. So what happened was 126, 126, 126. Then April came along. April here, it was still 126 all the way down. It tested at the lowest of March, and then guess what happened here on April the 20th, 23, 26, 100% sell market area, 100%. So this is the key moment for the dollar Canadian. If we had to study the behavior on the past, everything was fine, you know, taking care of the low, doing a good job here, doing a good job here at the 26. So it was moving between 124 and 126. So it was not a big deal. It was manageable, you know, sellers and buyers, it was okay. Never made it through the 26th of March. And that was exactly the highest. Then here, when it switched from the lowest of March, right? From the lowest of March. This is the change of area. So we're pretty fun doing the buy market area. And then here was exactly the moment where if you got stuck with a buy transaction here, because everyone saw this, everyone saw, oh yeah, it's testing the low of March. We can buy, it's gonna go to 126. I'm talking about compulsive buyers, not really reading price actions, saying, you know what, the market is testing the low of March here. What if they're going to think to change the market area? I'm going to go for sellers from now on. See, exactly what was what happened. Then from buy area, from the lows of March, the market went all the way down, and we changed 100% strategy, 100%. We changed strategy all the way. Now, the question is, okay, then what will be the next year low? Okay, well, wait for June, because June is going to give you the lowest level of the year, because that's the month, typical month, that the market does the reversals, that's the change, that, you know, exactly there. So June 3rd, and then the market changed on June 16th for the rates, and we got all the buyers back. So here is the question again. We got another question. I make myself many questions. I don't know if that helps you, but I make myself many. I don't really assume what's going to happen. I make myself questions. So take that as a huge advice. Make yourself questions. If you take things for granted, like you know what's going to happen, the market is going to tell you the right answer. So most of the time, it's not what you think. Most of the time, it's not what you think. So make yourself questions. And I say, okay, then we're back here. We're back in how the market is started. If it started here, the lowest, and this is the 124, what if the change of the rates, interbank rates on the Fed changes the market area? And instead of getting back into sellers, we actually have to change 100% strategy and go for buyers. What if this is the situation now? So I waited. I said, you know what, on Friday, this what I'm saying, I said it on Friday. I said to everyone, you know what? Yeah, you know what, guys? Be careful here because we were buying like big time. And then the European market started to close. And before I closed the trading session, I said, we're going to cancel any buy on the dollar Canadian, because I said, well, we are inside the 124. This is it. This is the change of market area. This is the change of everything. This situation on Friday changes everything. We are inside the lows of March. And that means we're from sell market area to buy market area. It's like none of this drop happened ever. And we're back to zero. Like the market started to move like that. Okay, but then I said, you know what if Fridays are not a very nice day to decide those things? I don't think Fridays are a day to decide those things. So I tell to everyone, let's cancel the buy. That was the last buy. So we canceled that one. And then what happened? Exactly today, the market opened and taking profits out of the dollar, moving towards the euro and the pound. Okay, so again, one trading session that we're going for 20 pips, maybe 25 pips, maybe 12 pips, it can get you assuming something that never happened. Assuming something that actually never happened. Again, the theory of price action, the theory, it was fine. We all understand. In fact, they actually, yeah, that's actually a good practice, not to trade Fridays. That's a good practice. So I said, okay, well, I'm an expert on the theory, but you guys, I'm also an expert understanding the psychology of markets, and I'm not assuming anything. I'm not taking for granted that it's going to happen what I think is going to happen. So let's take on Monday. Let's take this to Monday. So we canceled that last one. In fact, we canceled a few other trades on Friday. We also make some profit, but I'm talking about the last trade. The last 12 8 pip trade, we canceled that out. That was a profit that we were going after, but we said we're not going to hedge. Well, that's also a very important thing, you guys. You all know I don't use stop loss. Okay, I don't use stop loss. And the stop loss is a tool that is going to help you maybe at first to kind of get control of your transactions and your trading. You know, it's like something that you can explore, but don't decide to go this way when you trade, you guys, okay? And I have so many haters because I'm defending not to use stop loss, especially brokers, because that's the way they actually make the most money. You know, people using stop loss. So they, oh, it was stop loss. They put more money in trading account, and slowly they start to consume their money. And that's it. That's why brokers, exactly. That's why brokers, they want you to use stop loss. So, and some transactions you can hedge, some transactions you cannot hedge. Let's give a practical example. So let's say, for example, we are in March, you know, from the 11th to the 15th, right? So we are into the sales strategy, blah, blah. But then I know the lowest is coming. I know the low of March is coming. So we were into the sellers here. And then I said, any sale on dollar Canadian between the 1st and the 2nd week of March, it is not to hedge. Any sale between the 1st and the 2nd week of March, it is not to hedge. Well, in fact, any trade, so please write this down, any trade between the 1st and the 2nd week of March, you don't use hedging tools. You don't use hedging. What you do is that you cancel, you expire. Here, you will expire the trade. So what that means, well, of course, you know, you're gonna sell, you know, at 124, you're going for the target 2380, whatever. And then let's say it takes you over 15 minutes, the trade, to get into profit. You waited 20 minutes to get into profit, and it's just taking so long, and the European market is about to close, Europe, closing hour. Right. And then you're like, you know what, that's it, I'm going to cancel. So you expire. It's not that complicated. If you don't see profit fast and you are trading here on these 2 weeks, you cancel, you just close it. That's it. No need to tell the broker that, you know, cancel with the loss of $10, $20, $30. No, you're only going to pay the spread here and the commission. So it's going to cost you maybe $5, $10, not 30, not 50. Okay. So expiration, and it's also explained in the book, the difference between hedging and expiring transactions. And the best I'm going to say, how you measure that? I measure it with time. You measure it with time. You basically use the logic of the market. I cannot tell you a golden rule like some traders like to do. The golden rule, no. I use the logic and say, okay, I'm going to sell. I'm selling. I'm in, you know, the tricky days. So I waited 10 minutes. Okay, well, that's a lot of time. For a swing trader, for a scalper, it's a lot of time. 15 minutes. All right, you know, I stayed up. I see the price coming and going. I see the fluctuation, but I'm not on profit. I'm still not even paying the commission on the spread. Okay, I waited 5 more minutes. That's it. You do not wait any longer, because you know that after that, the next day, right, the next day, the same profit that you wanted to make for, I don't know, $30, the trade, maybe 50, it can get you a drawdown of maybe $150, $200, even more. Drawdown TD. So you don't hedge it. You know, you cannot hedge sell on the 1st or the 2nd week of March. The same as you don't hedge anything on the full month of June. You don't hedge here, you cancel. So we were really lucky, you know. I mean, when I say lucky, I mention people that is because of my live trading sessions, we got people zero experienced. They've been here with me 2 years, 1 year, whatever. And none of them were stuck with any losing transaction. None of them. So you might say, well, you know, I say what I say, but then people do whatever they want. And in some years, it happened to me that they don't actually listen some of the suggestions I do, so they do their own. And this time we're lucky enough, none of them were stuck with any against transaction ever. Like, you know, no sell on the euro, no sell on the pound, nothing. So everything really impeccable work this year. Actually, the first time, because many other years, always some people stuck on the against the reversal because they were busy or working on something else or not paying attention, and that's it. So very important, you do not hedge in certain times of the year, because that's exactly the moment when the market is going to revert and give you exactly the opposite as the main strategy that you're using on the daily basis. Any questions?
So you usually are lasting about 15 minutes? Like
yeah,
between opening the trade and closing.
I like to take the 15 minutes. When you are of those tricky days, I don't wait for so long. Maybe you cancel the first trade on the first 15 minutes, but it has to be the last trade you do. It has to be the last trade that you do. I mean, talking about the time of the
time of the day.
Of the day of the market. So let's say that you're like a pilot on this. You have to check the weather, the engines, the temperature at the same time. So you check the trade, the prices, and the hour that you're doing your trade at the same time. So if I'm trading, that's the last trade I'm going to do because I know that market's about to close. So there's really no volume, no market there. So I put in together many things, and I say, okay, well, the time is not that convenient. My trade is the last one because I'm pretty sure that's the lowest of the day or the highest, depending on the trade. And then I'm like, I think I'm gonna cancel that one. Let's say that then it reached your target. You cancel, but then it reached your target. So you're supposed to make a profit. And then that's when your ego comes in. And then you're like, I knew it. Why I canceled that? I'm gonna open it again. So you open it again, and that trade, it was the losing trade. So pay attention to your ego. It's gonna trick you many times.
Just a question here regarding trades, because you say when it comes to the closing time of the market, but you only usually trade like in the first 2 hours. You don't really trade at the closing of the market. Is that correct?
Well, yeah, I mean, it's just, but there's a logic behind that,
Yes,
institutions and
you explain because the bank's transaction and
exactly.
This is where the volume is.
Yeah, and they started to close their trades and at the last hour, Sometimes it's gonna move a little bit up and down when the market is closed, but that's not a reference. That's not a reference.
When you say the last hour, are you referring to like actual bank working time?
Yes. You see that the banks, they close at 2 p.m. most countries around the world. They're not open down to 6. I mean, I'm talking about no commercial thing. The how you call that?
Interbanking transaction.
That, but also the trading floor. How you call the trading floor of a bank? It's mesa de dinero. It's the trading table. The money table. I don't know how they determine English actually, because the banks have also the traders. Some banks they have traders. And
yes, they do.
So I don't know if you try to buy or sell a currency in your bank, but when I call them, it's only down to 2 p.m. They won't take any transaction after that. So even if the commercial bank closes at 5 p.m. or 6 p.m., if you want to do trades with money, and I do that, I also do that with local currency in Chile, and they won't take any order after 2 p.m. After 2 p.m., no more orders. There you go. Desk floor traders. Desk floor. There you go. The desk floor traders. So yeah, that's and they actually they trade, but mostly they take orders over the phone from people. So I tell them, okay, I want to move $1,000 from dollar to peso, peso to dollar, whatever. And I know I have time to do that just 2 p.m., just up to 2 p.m. or Chile time. But I know the bank closes at between 5 and 6 p.m.
Okay. Yes.
So, and that gives you the idea that actually the massive amount of money, they move it only after past noon a little bit, only past noon. No, no more than that. It won't. So that's the reason why the time, so if there's no banks, there's no volume, there's no traders, there's no volume, there's no people buying and selling, there's no volume. Okay. So again, we have here the Canadian open it for sellers today. So we were lucky enough not to get stuck with any buy transaction. And you can tell, if you see here the dollar Canadian, I'm in 15 minutes time frame. This is 15 minutes. And it started slowly just dropping and like very, low candlesticks, up to here, that was good. And then slowly. I mean, we also have trades, okay? We do have it. If I show you the Discord today, we have still pending transaction, okay? I don't know if you can see it. Yeah, you can see it, right? Can you see the screen that I'm showing now?
Yes, we see, yes.
So we still have a few trades, you know, because I am, yeah, we can do something. That's okay. That's fine. But I'm talking about the problems you might have. The problems you might have. So if the market closed for sellers on the dollar Canadian and we are selling, I'm going to have another sale to do here. Yes. If the market closed for buyers on the euro and we were buying today actually, and I'm going to have another buy here to do. But the market's going to take care of it. I don't have to be here. You know, I know where my buy stop's going to be. I know where my take profit is going to be. I don't have to be watching. I'm not in problem. I'm not in danger. But this is the after hours trading that we do, the overnight trading that we do. We do some overnight also. In Asia market area, hours, I also update many things. And I tell them, yeah, we're going to do this and that because I know what is safe for those hours. And I'm just going to place the trade I think is safe. So it's going to be a market range above here, way below here, considering problems too. Like it's going to get activated because of spread, or this could happen, or that could happen. So that's the overnight trading that we call it. The overnight trading is that trading that I know we're not in danger, and we just follow the flow of the activity of the previous trading session. Okay. So just to give you a glimpse,
Hello.
For example.
Hello.
Yes. Please. Sam?
Sam, I have a question.
Yeah.
Please, can you differentiate between the daily pivot point indicator and the Fibonacci indicator? Is there any difference between the two, please?
Yeah, Fibonacci is actually not an indicator. I'm going to say Fibonacci is just a tool to measure the you know, the corrections of the market, but it's not really to indicate anything. So most traders, if they use Fibonacci, what they're going to do is like this. They're going to grab the 100% activity of the market. So I'm going to go for 1 hour. So how you use Fibonacci, for example. Again, we're not into indicators anymore. We passed that. People points are going to help you, but it will not. Actually, we have that topic within the next few classes. Okay, so I think the next class we talk about candlesticks, and then eventually we're gonna go to the people point, 100% people point. Again, an indicator, it will not indicate you anything. It was just going to show you and why you're trading through the day. It's not going to tell you where to buy, where to sell. Yeah, it's not going to do that. I don't know, Caleb, did you send something? So, but again, if you want to, it's a great tool. It is a good tool. And existed for, I don't know, I think the tool existed for decades to use it in the financial market. I like it. I mean, it's a good tool, but it's only analysis. You had to make the difference, and you had to understand that this market, you can do all the analysis that you want, but then whenever you start using your money, you think in terms of strategy only. So one thing is to the analysis, a different story is to do your trading. The trading is one thing, the analysis is a different situation. The analysis, you can use moving averages, you can use the MACD if you want to, you can use Fibonacci if you want to, you can use, I don't know, what else, the RSA if you want to, all those tools, great. If you want to just, you know, sound smart with your friends or whatever, yeah, you know, the MACD was like that, Fibonacci was like that, but it will not show you, it will not do the job of the trading. It will not do the job of the trader. The trader must be checking many things at the same time. The analysis is just one different world, and you know, it's funny how brokers, they'll send you the analysis, you know, but make sure you have to see and understand that people that do this analysis of investing.com, forexfactory.com, I don't know, Investopedia, brokers, they get paid a salary, okay? The analysis people, that they seem so smart, they get paid a salary, and you're the one here. We are here, they get paid a monthly, a fixed income, and we are not here. We are here. So to consider this, the analysis of the MACD, Fibonacci, movement, whatever, yes, I know them all. I studied them so well on my first losing year. And I'm like, what? Am I losing? And I know all of them. Yes. And then I started to realize, okay, this is a completely different world for me. I'm not here. I am here. You know, we all here. Okay, but these guys, the ones that do the analysis, looking good, you know, sending you those emails with moving averages and RSA and overbought and oversold, beautiful. Great, but I'm the one here. You know, I'm the one that if this fail, if the overbought, the oversold, if your suggestion of moving averages is failing, I'm the one that has to fix that then. So again, indicators, even the people point, because the people point has actually a theory. You know, so I can write another book just talking about how the people point can set you a trading for yourself. But again, I'm here if I'm saying the indicator people point is going to do the job for you. No, it's not. You're here. You are here. And the only way you're going to learn to be here in this world of traders is learning from traders that they are already coming and they've seen all of it. And I'm sure there's something new to see. I'm sure there's got to be something new for me to see, but I've seen many things. So I'm on this side, I'm on your side to help you here. I'm not here. I'm not gonna go and say any bullshit about, yeah, you know, the people point you're gonna buy when it's above the central one, and then you got different targets, and the R1 is gonna show you the first target, the R2 is the second target you can take for. No. No. That being said, everything I'm saying now, and all these lessons that we come across, I'm helping you on the side of to think as a trader, not to think as the analyst. Here, people get paid to do this. Here, we put our money where our mouth is. We put our money where our mouth is. And this is, you know, what's going to pay off. If you do the right thing, if you manage your ego correctly, if you just, you know, have everything in control, eventually it's going to pay off. It will pay off. Why I'm saying will? Because at first, let me tell you, at first, you're going to be just having upside down, some stop outs, you know, margin calls, you know, so I don't know, maybe like 3, 2, maybe 4, maybe 5. So you're kind of like this. But you knew that in your upside moments, you knew what you were doing. So the upside moments, you take them as your knowledge curve, like the knowledge part of your journey. So you take all this knowledge, and then eventually you have only upsides. Some around here, maybe like expiration trades, you know, some take losses, some along the way, but it's all the way up. You're not here anymore. Here, we're all confused. On this stop out moment, we're all confused, you know, just trying different things and listening to this, listening to that, and changing things around, coming back to the stop loss and moving from stop loss to hedge and not understanding hedging. And I understand, it's part of the process. Trust me, when you go from this to this, it's going to start paying off. This is a situation where you got all control. You got the control of everything. This not scare you anymore. It's not scaring you anymore. None of this. Okay, it is a process. It is a process, you know. But if you're patient enough, and you know, if you really want to do this, then there's no other way. The universe, it will provide you with the tools, with the emotions that you have to have, and everything you need. Okay, but again, I understand price action is something really new. It's really new. It's really new for everyone. That's why there's 5 people here, 4 people here. We're very few. Because why? The professional traders are not showing what I'm showing. They're actually making tons of millions in New York, in London, whatever. But I'm here sweating in Mexico right now.
I was just about to say, you're moving places all the time. You're not in your last location.
No, I'm not. Well, I could. I was in Chile, but then I decided to skip the winter. So pretty nice in here. But again, like I said, eventually you're gonna have the control of all of it. Eventually, if you actually have that goal in mind, it's gonna pay off, all of it. All your margin calls are gonna pay off. All your frustrations are gonna pay off, all of them. But you have to be patient and not giving up. If you give up on the way, let's say your second margin call, maybe your third margin call, or your first one, you lost the game. You lost the game. But you're not like that. That's why you're here. You're already a winner. Honestly, you are already a winner. So trust the universe. It's gonna provide you with all the tools, all the emotional control that you need. And I'm here. You know, there's not that many people that discover price action because they're not showing this. They're not showing this. They want you to get your money to them so they can manage your money, and that's it. You know. So all right, thank you, Carla. Thank you so much for all your comments. What else, you guys? I want you to take things slowly. Like if I give you too much information, so you know, I'm just gonna give you one exercise so you can go and do that with it. So I want you to take, let's say, I don't know, euro, pound, dollar, yen, gold, silver, whatever it sounds okay with you, because sometimes you just, I don't know, you don't like the Australian dollar for whatever reason that is. So you have to have a feeling in what you want to trade. You see, dollar, yen, euro, yen. So it's a great exercise to grab, for example, the 2021. Oh, that's why I'm sweating. The AC was off. It's pretty hot here.
Well, you like your heat.
Really hot. I love the heat, but so the AC was off. Okay, so this is a great exercise. So grab, for example, I wouldn't grab the 2020 year because the 2020 we faced a very important crisis. So don't grab the 2020, but take, for example, the 2018, 2019, you know, those years without crisis. Grab them and mark your lines of the lowest, the highest of March, and now you're gonna add to that analysis, because that exercise is the analysis exercise, not the trading exercise. We're into just for now giving gaining perspective of markets, so you know what to expect. Again, you know, my rule is expect the unexpected every day. So whatever I know about price action, every single day, to me, I'm on zero. I know nothing. Markets show me the way today. That's my attitude. That's the attitude everyone should have. Doesn't matter how much you know. Every day, you are at zero. So markets show me the way, and then your subconscious mind is going to start working for you. And everything you see from your past homework, analysis, and everything is going to come to your conscious mind when you are actually trading. That's the attitude, because if you start assuming things, you can mess it up. You can really mess up things, your trades. If you're zero, like, I don't know nothing, show me, you know, how to do this. But you've already done your homework, you've done your analysis. You know the corrections, what to expect from a correction, okay? So the idea is, take at least 1 or 2 years from any instrument that you like. Try to have the, you know, euro, dollar, pound, dollar, yen, dollar, Canadian, gold, I guess, Australian dollar. And then get your information, again, from the low, the high, and the corrections. Now add the corrections, because this is the first time that we talk about it. And we were lucky enough that we had the corrections last week. And we are now trading back to the normal situation. We're back to normal. After the correction, we got the market coming back to what it was. Correction means if the market was up, correction is to sell, and then we get back again to buyer. If the market was down, correction means going up. After correction means we're gonna go sell again. Try to grab those moments on the 2018, 2019, 2015, whatever year, and see them. See them. Grab the corrections and see what to expect. Because it's very, I mean, it's again, it's the analysis part. Because it's gonna come the year, let's say next year, or 2023, 2024, you're gonna be trading and you're gonna be facing March or June, and then you're gonna stuck on that last transaction that you did not close, thinking, I'm gonna hold it for the next day. Those trades are not to hold. Those trades, if you get stuck on a daily trade on those time of the year, it can mean a stop out the next day. Okay. Yes, that's actually a great question, because dollar yen actually did not show that many changes. So let's see the dollar yen now. So we got dollar yen here, May, April. Okay, I'm gonna go for 1 day. So here we go. Information of dollar yen and all the behavior so far. We got March right here. This is the highest. Let's take it 110.70, the highest, around the 110.70, the highest of March. And the lowest of March, it's got to be around the 109. It did not happen that much. This honestly is not the year. This is the high. Let me take the low. I'm way too far from the. No, I'm gonna take this as the high. This is the yearly high, but it's not March. This is March. Let me take the low now. So this is March. So 109.20, 109 levels, the highest of March, and the lowest 108.40. 108.50, 108.40. So just not much going on, and that's it. And then this is the expected, and then it changed here a little bit in April. So it moved from buyers to sellers for a few days. Yeah, the highest, exactly. And then what happened? It came, the correction was this one, from sell strategy to buy strategy, and now we're back to buy strategy again. But we are facing the highs of March. We're facing the highs, I mean, not March, I'm sorry, the highs of the year. The highest levels of the year. And that will be 110.70, 110.80. So we're the buyers, yes. Is the buy pressure area? Yes. But the problem on dollar yen, the problem with dollar yen is that we're too close to the highest level of the year. So let's go down to 15 minutes. And what I see is that, yeah, it is into buyers with above the 110, but we got the highest of the year very close. Very close. I mean, buying is okay. Buying is okay. We got the 110.40, from 110.40, 110.50, 110.70. Exactly. So we had to be kind of careful with the dollar yen. One thing is for sure, the strategy above the 110, it is to buy, even if it goes down. If it goes down, but it touches the 110, or even the 109.90 or the 109.80, you're gonna buy. I wouldn't go for any sell transaction on these levels for dollar yen. Again, even if I have a sale day on dollar yen, I will wait for the buyer. I will wait for the buyer. Okay. So yeah, I mean, 110.30 up to, it can reach the 110.40. That's a good target. That's it. And then you wait to enter again at the 110.50 with the target at 110.70, like that. And here, you learned today that any buy that takes over 15 to 20 minutes, and especially if you're into the closing hours, You're not going to hold it, of course. You're going to cancel. You're going to expire. That's it. You're going to expire the trade. You don't hitch a buy at the highest. And you may say, it's just 8 pips, only 10 pips. I can hold it until tomorrow. That means a stop out at the next day. I mean, having a buy at the highs, especially on dollar yen, they can get crazy sometimes. The dollar yen, it can get crazy sometimes. You're not gonna make it. You're not gonna make it. So, but yeah, it was not the year for dollar yen, you know, since it started on March and I saw the range of dollar yen so tight. I was like, what is that? I never seen in my life a market area on dollar yen so tight, so close, so like not much going on. And after March, I said, well, maybe it's not the year for dollar yen. And honestly, if you see my summary on my trading account, it's very little dollar yen, very little. Now there's other traders that they say, well, but that's actually a good thing because, you know, less volatility, less market into dollar yen. So why not? Well, yeah, that's also a way to see it. Don't go to the crazy of dollar Canadian, go to the dollar yen. If you know that already March it was so tight in the market area, you know, probably it's not a currency pair to work on that specific year. You might see as an advantage, you might see it as disadvantage, depending on you. Dollar Canadian, it is very sensitive, very, very sensitive. Two major economies together fighting to who gets the investments, who gets the money to here and there is a very sensitive cross pair. The dollar Canadian, it is crazy. If you want to call it crazy, it is very sensitive. Two massive economies fighting. So yes, it's a huge fight on that one. Totally, absolutely. Okay, so here we go. The euro into the buyers, the pound dollar also, and this is actually the great moment for them since we're coming from the 141 on the pound, and then it went all the way down to 137, 38, and now we're all the way up again. In between, if you did a good job understanding corrections and stuff, you're taking advantage of all of it. You're not hedging because we're not hedging anything. We're just going with the flow right now, and that's it. And now the next month that we had to consider as very particular, it's December. December, Christmas rallies, announcements, people spending, people just going crazy and everything. So December is also a month that we do not hedge. The entire month. The entire month. Okay.
What about January?
Wait, what about what?
January.
January, nothing. January and February are not months to anything. Those months is a swing, is, you know, things going on in the market, yes, but it's like a free, how can I call it? You know, when it's like a free feel. You can do anything on January and December, and it's not going to change anything. Like you can go buy and get stuck on a buy, and the next 3 days you get again there, or you can get stuck on a sale and just give it to the market 3-4 days, you get back to that sale. So it's beautiful to learn. I mean, because again, you can mess things up, but then the market's going to recover so fast. Well, that is January and February. But March, you are not going to get stuck on anything. You're not going to hedge, and you really need to know what you're doing because it could mean stop out in 2-3 days. Absolutely. January and February are fine.
So when you say stop out, it means the blowing of the account?
Yeah, it's like, you know, if you don't hedge and if you do the right thing, you're out. Yeah, I'm talking about if you don't hedge, if you don't expire the trade at the right moment, the basic things, you're out.
Because of the emotions.
Yeah. Yes. Okay, guys. Well, it was good. It was a good lesson. I'm gonna stop the recording so then I can share with everybody else that did not join us. So yeah. Next class, I think we're gonna talk about the let's say, well, depending on what the market give us, you know, sometimes the market is giving us many things to study from, sometimes not. So on this Monday, we got the corrections and of Wednesday. So that's why we got a lot of things to talk about. But we'll see. And I will let you go with candlesticks, clean candlesticks, how to really know them, understand them, and how to use them. And I'm not talking about patterns. I'm not talking about, oh yeah, the you know, soldiers and the, you know, the whatever. No, we're not talking about patterns, the name of candlesticks. No, if it's supposed to be that easy, trust me, we'll all be learning only patterns of candlesticks, and it's not. Trust me, I read the book of Steve Neeson. It was a big book, and to do what? Nothing, to lose money.
Yeah, Steve Neeson.
There you go. I respect the author. I respect his material. Beautiful. Today, you don't trade with candlesticks. No way. No way. You trade price action with me. That's it. Yeah, it was funny. I was like, well, that sounds easy. If you can understand the patterns, you know what's going to happen within the next 15 minutes. How naive I was. But again, it helped. You know, if it is not for them, for Steve Neeson, for Murphy, for all those guys, maybe I wasn't learning price action. So, yeah. So we're gonna talk about candlesticks, but just how to read them correctly, so you know when the confirmation is there and no confirmation. So next meeting it will be confirmations, no confirmation of prices. That's big. That's also big time for you to kind of get it right. When do you get the confirmation to get in the market, and you don't get the confirmation? There's always two ways to go. Confirmed prices, no confirmed prices. All right, guys, I'm going to the beach. I can show you here. It's pretty nice. I don't know if you can see it.
Oh, you're making us jealous.
But come on, you're gonna be doing this lifestyle in the future. We all traders, we get so tired, like, well, because of the.
Wow, beautiful.
This is Tulum. It's a very small town in Mexico. And I thought it was
that's
gonna be
quite
quiet.
famous.
What?
It's appeared to be quite famous, quite affluent. Nice area.
Tulum? Yeah. And I thought it was gonna be quiet and peaceful place, but it's so much party going on. I was like, wow, these people are loud.
Well,
To be at 10.
Latino people, you are Latino, you know that.
Yeah, but actually, yeah, I think I should actually expect that to happen. But waking up at 5 a.m., I'm not like, you know, just people crazy all over the beach so late. I was like, wow. I was not expecting that from Mexico. But yeah, all the US people, they come here because they actually can party like that.
But come on, Mexican people, they like party.
They do.
And to be honest, I think all Latinos, from what I can.
Yeah, I don't know. I born there, but I don't feel I understand them. I'm more into the US culture, like, you know.
How much time did you spend in US, and then which part of your
not that
life?
much, but maybe, yeah, not that much. I mean, 5 years, it's not as long. But I got
5 years.
So what?
Only 5 years?
Only 5 years. Yeah, it wasn't that long.
But which part of your
So what?
which part of your life? Maybe it was one of the part of your life. Those 5 years, they were quite influential. They had a big impact.
Right.
So maybe that's why.
I mean, most things of the habits to develop this correctly, I got it from New York. You know, because you see them, you see people how they do things. They spend the first hour exercising, meditating. So I kind of got to see and learn that. So I'm guessing that was my most influential city, but I've been around in many others. So anyway.
Yes, But at heart, you're still a Latina with an
I
American
know.
influence.
I know, I know, I know. I'm proud though. I'm proud. I'm proud. Argentina, proudly Argentina. So. All right, guys.
No problem with anything.
I'll get you this information on the YouTube so you can get through material, and I'll see you. So please, next Monday, let's make it 3:30 p.m. East.
EST, Eastern Standard Time.
Eastern Standard Time. So you're not waiting, and because I'm still on the computer, but sometimes I'm like, doing other things, and my agenda is like, I gotta finish this. I can't just start. So, but I don't want to make you waiting. Okay.
How many hours a day you spend with all this training, trading, conferences, and what else?
2 hours. That's it.
No, not just the trading, with everything. Well, you do this now, and then you do your recording. Sometimes you have them on YouTube or whatever other places, and then spending time, I don't know, whether with your,
Oh, how long it takes?
sorry?
How
No,
long it takes?
with everything that you do regarding or revolving around trading, I think, I don't know, but I assume you spend quite a lot of time.
No, not really. I mean, this is very short content, and I write on the weekends, and not really. I mean, if I had to name how much time takes me watch my trading a day, I'll put it like 20% of my day is watch my trading. Less than 20% of my day is doing this. I cannot say the same before. I was like all day studying freaking everything about trading. But then after that, after my losses, I said the less time I spend on this, the better I do. The more clear mind I have, the more focus I get. Because
I agree.
I convinced myself that that's the way it has to be. If you convince yourself the opposite, then the opposite is going to happen. I said the less time I am on the market, the more time I'm having fun, distracting myself, and helping others, the better I get.
And I think I asked you last time about, I forgot the name of your broker that you said the work from UK as well.
So what?
The broker that you're using.
Yeah. What about him?
Which one is he? I think you mentioned something like last time, but I forgot.
It's a one financial market, one financial. You can write to Carolina. You guys know Carolina, right? She's the one taking care of the English speaking people.
Mhm.
She has all the information. One financial market, it was a huge discovery for me because got so frustrating trying admiral markets. I even tried Iron FX one time in my life. What else? AvaTrade.
Yeah, they big advertising for AvaTrade, but there was another one that they advertised a lot, and then quite a lot of people got into it, and then I think they had some problems, even data breaching and some other, I forgot which one. But AvaTrade is still out there, quite heavily advertised. But yeah, because you said this, although they are regulated, they find ways around, so you have also quite a big leverage with that.
Yes, so they are FSA regulated, but since what happened with the, how was that called? The problem they have with leverage. So anyway, they routed all clients that were not from Europe to Vincent Island. But your money is in Europe. It's protected by the England jurisdiction, but the papers, you sign them with St. Vincent law. St. Vincent law. But again, the broker is what matters. And yes, it's regulated and everything is outdated and everything is fine. But yeah.
So is the only one broker you're using?
I have money in two more. I have money in Swiss Quote, but I don't trade it. And then I have, that's it. Oh yeah, and then Axie Trader, because Axie bought One Financial, but I have money there, but I'm not trading with it. I thought I was kind of like trying to diversify, but then I'm like, okay, that's bullshit. You don't diversify using different brokers. You don't do that. That's not the meaning of diversification. That not means that's not the
No,
way it goes.
you spread yourself too much, and then that's not good. You cannot
Yeah,
keep.
I don't know what I was thinking, but yeah, it was actually 2 years ago. But I tried them though. I tried Swiss Code and it was okay. But you know, the I think the most advantage, actually, yeah, the advantage that I see is that I know the partners of One Financial. So I got the email, I got the WhatsApp, everything. So if something happened with me or any of the traders that are there, exactly. So I got a random phone, you know, like what happened here? It never happened anything, but it's good to have people that they know who you are, they know your business, and you know, I refer them people, so they better do a good job. Instead,
Yeah,
you know,
because if I go with them when the time comes, I'll
exactly.
mention that
And
you
all-
would be the one who sent me, or I'll let you know anyway.
right, and all the other ones, I'm just stuck to, you know, I'm stuck with the commercial guys, you know, the one that sell you the product. And I never got to see the partners with the other ones because they don't care. You know,
There was
whatever.
one that I traded with, and they were not regulated, but there was a good account manager or whatever they call it, one of these guys that they help you out to understand trading. And he was good actually. I've learned quite a few things. And I'm not sure if he mentioned the price action, but he gave me some insight. But I don't know, maybe because of he was sharing too much. I don't know what happened later. His dad was actually trading in the past in the stock market in New York, like in the floor.
I don't know.
Like
Honestly, I know how many colleagues out there, but I don't know them. None of us
Oh,
actually see each other. Like all of them are defending what they do because that would helps for them. But anyway, guys, I have to go. I'll see you next Monday. Please feel free to contact me, to write me, you know, my email and my Instagram and everything. So
enjoy your time at the beach.
thank you so much.
Thank you. Bye-bye.
Thank you, Sam. Bye, Caleb. Bye, Joaquin.